The East doesn't trust the West after what we did to Russia, warranted or not. The West doesn't trust the East because of what Russia did, warranted or not. And so nobody wants to extend credit anymore. I'm not going to lend you money for 30 years. I'm not buying your bond.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Vince Lanci joins us today. Vince is the owner operator at Echo Bay Partners, the publisher of the Gold Fix Report, and an adjunct professor in capital markets and commodities. As well as that, he is the host of the Morning Markets and Metals program over at Arcadia Economics. And we are delighted to have Vince join us once again today. It's time to saddle up and silver up for Vince Lanci. Vince, welcome back to SBTV. How are you doing?
I'm doing well. Thanks for having me back.
Glad to have you back on, Vince. And we also got Jake Perigo joining once again. Jake is a fan of multiple gold and silver channels over on YouTube, so he has a few questions he'd like to ask you as well. Vince, I've long said globalism will eventually fade back into some sort of regionalism, and one reason being globalism will always call for a low cost producer, and one day that low cost producer or producers they're gonna itself become economic powerhouses, and then there will be economic shifts. But you mentioned recently the idea of geo-economics. Can you explain to us this geo-economics?
Sure. I mean, it's a word that's growing in popularity, but uh, if geopolitics is a word that we're all familiar with, and that's how nations interact with each other and their policies to get along, whether it be war or business. Well, if you factor in the fact that people won't start wars with each other if they're doing business with each other, and so that's where it's basically geoeconomics. So nations that have established supply chains and commensurate payment chains, which is what's going on right now in the BRICS and the West in different ways, are going to be able to trade with each other. So if there is no trade, there will be war. In fact, that's actually funny. It's actually something that, you know, uh, Ayn Rand and Karl Marx actually agree on. Opposite ends of the economic spectrum, but they agree. If Ayn Rand said, if you don't let men intermediate with each other with money, then there'll be war. And Marx said, uh, if people can't use money to do business, then they're going to oppress each other, something like that. So we're looking at a geoeconomic world now because, as you hinted at before we started talking on air, globalism is collapsing. And because globalism has collapsed, things become more regional. And because they become more regional, you have to start trading with your neighbor. If you don't trade with your neighbor, you're going to be at war with your neighbor. You have to live with that person. So that's the practicality of geoeconomics.
Yeah, I completely agree. I remember way back in business school, when nations talk to each other, they're usually at peace with each other, and it's when nations don't talk to each other, then you're starting to have some problems they're building up, and I think we're kind of seeing that today, sanctions and whatnot. But another result of this fading of globalism is we are seeing the flow of resources, personal and private global wealth also moving from west to east. I think Singapore has the most family offices in Asia, both Asian and non-Asian family offices are setting up here, and they're looking to capture and support their investments in the region. So, is this movement of personal wealth part of this geoeconomics as well?
Um, the well, actually, it's kind of interesting you put it that way. I would not have linked the two together because the geoeconomics, I would look at it as how nations deal with each other, and the migration of wealth, let's say from west to east, is actually, I think, more of a people wanting to prosper. And here's what I mean by that. The East is rising in affluence, so if you want to look at it from a class, right? There's a shrinking middle class in the West. There's a growing, burgeoning middle class in the East. So it's, the cycle, the big picture cycle has swung towards the East. Now, why does that attract money from the West? Well, we know why it attracts money from a business point of view, but you talk about individual wealth. Well, if you have the money and you are mobile, if your wealth is portable, then and you think about it, you're going to leave. Guys like Jim Rogers, right? Years ago, he moved there, right? Everyone knows about him, but very ahead of the curve. But that's the idea. And one of the funds that I manage money for has a Singapore office, and I won't say their name, but they do a lot of they do SPAC deals and they do convertible bond deals out of there. So Singapore is uh, Singapore is well, let's put it this way. Singapore is the reason China went capitalist, right? Because of Lee Kuan Yew, and if I'm saying his name right, and Singapore is the first nation out there that's uh, truly financialized. They understand the business model of that, the hybridization from East and West, and so China is going to look to Singapore again, I think, uh, to help financialize things like uh, you know, M trade and what have you. But yeah, Singapore is the logical place to go.
Okay, yeah, and it's interesting because we see a lot of these things full steam ahead, flowing west to east, and then we see China or central bank gold buying also continuing, and we see reportedly China slowed down on some of its gold purchases. So, in your opinion, why do you think China has slowed down with its gold purchases?
Well, that's a tinfoil hat conversation. All right. I'm trying to be succinct because I've written a couple thousand words on this recently. Okay, so China has a like China stopped buying now for several reasons. Like their announcement to stop buying was for several reasons. Now, this is my opinion. You can say that I might not be right, but I'm right. It's one of several things, and if I don't know, I'm going to tell you I don't know. Right? Um, Look, China doesn't want to be. There's 7 or 8 reasons for China to stop, and the best one is BRICS related. First of all, China announced they were done buying because, hey, they probably are done buying officially through the PBOC. They're not done buying, right? That's first. Second, in no particular order. Second, you know, China's coming out on the international stage and they don't want to be labeled a currency manipulator. So they make a public announcement, a very public announcement. They play nice in the international community. And at the same time, Russia starts talking about M trade. So they're just making sure that they remain neutral. They have it both ways. They're not stupid businessmen. I appreciate that. Other reasons, well, this is where it comes in with the BRICS. This is where it gets a little bit more spicy, but I believe it to be true. If you look at the buying that China's been doing for 18 straight months, when they were buying gold, India was buying mostly silver. When they were buying gold, there weren't a lot of other buyers of gold at that level. So, China's the big dog or the big player at the table in the BRICS. So when China's buying, if you're all friends, you don't compete with each other. That's how a cooperative works. China gets done buying, gold drops $80, $90, you know, and that makes it cheaper again because all the front runners, all the people that are buying in anticipation of China buying, they get the rug pulled out from them and they get out of the market, and that makes the price more reasonable for countries like India and Turkey. Now, my proof of that, my some of my evidence of that is uh, the month, the last 2 months, last 3 months, March, April, May, you saw declining purchases by China. That's not an accident because during those 3 months they were declining, India was ramping up, and India took back, you know, a boatload, a couple boatloads, a plane load actually, of gold from the UK. So I think they're just taking turns and showing professional courtesy to each other. Now, there's another aspect to this I don't want to get too much into, but I think China's done buying the public gold because they're getting ready to roll out the more publicly the M trade and the BRICS SWIFT alternative. And these things are all, China is signaling to its partners, we're ready to go. That's what they're doing. That's what I think. So that's why they stopped buying for now.
If you're enjoying this interview with Vince Lanci and I, please consider subscribing to our YouTube channel. And did you know that at Silver Bullion, there are 6 different types of accounts to fit your needs? To find out more, go to www.silverbullion.com.sg, click on the signups tab, and choose from these 6 types of accounts. Or email me, Patrick at silverbullion.com.sg, and I'll help to get you started. Do you think there's enough gold, or okay? Because when the BRICS first came about, my thinking was we're going to be looking at a platinum backed type of a currency because Russia and South Africa have huge platinum mines there. So I was really thinking platinum, but it moved over to gold. And but having said that, and how the gold is kind of having to be divided up, so to speak, are there other metals that might be included in the BRICS currency?
Well, all precious metals are potentially going to be included. Potentially, I'm not predicting. I'll make a prediction, but not with platinum and palladium. But your logic is sound because when the BRICS started the feasibility study for this idea, they said, we want to be able to, this is what they did. They were trying to decentralize and have multipolarity, and everybody used their own currency. But at the same time, they wanted their currency to be settled in a basket of commodities that they traded. Now, in the beginning, they looked at creating a basket which was a combination of gold, of oil, of natural gas. And I'm not saying you can't do those things, but it's not the way to get started when you're doing a very complicated trust related situation and you want to make sure that you all agree on it. So, 2 countries, you have one country that's in the BRICS that uses oil for you know, making, uh, you know, petroleum jelly, or grease applications. And then you have another country that's using oil to make gasoline. And the economic impact of those commodities is different from country to country. So you can't agree. I think it's worth this. I think it's worth that because of what you do with it. And they figured out, I think, something actually quite smart. They figured out this solves a lot of problems of trust. Not all of them, which she brought up one of the problems that it hasn't solved, but this solves a lot of problems of trust. If you want to make sure that you trust each other in this regional world, right, that you talked about, you need to make sure that the trade that we do every month gets done. And how do you do that? Well, we're going to trade commodities that are consumed for commodities that aren't consumed. So I'm going to buy oil from you. You're going to pay me in gold. Now, we'll get to how they do that in a second. You're going to buy wheat from me. I'm going to pay you in gold because I need the wheat. If you don't pay me the wheat, my people starve. We're at war. It's kind of like a hostage situation. You will give me that wheat or we have a problem. I will give you the gold or you have a problem. And you kind of create it's not a prisoner's dilemma, but you create a mutual dependency. You create the trust is out of necessity. You're not talking about Costco umbrellas or ceramic mugs. You're talking about things that you need, and that's how you build trust by going with the most important things. Now, with regards to gold and other metals, to just bring it back to that, once they realized and this is I studied this, right. Once they realized that they couldn't put other commodities in the basket so easily, at least not yet, they said, "Well, we're going to go with gold. What else do we want to put in the basket?" Well, every country would love to put their own sovereign bonds in the basket, but they're not going to be able to in the beginning. China may, but they're all going to ask and they're all going to say no. So pick some other crops, right? So you've got, let's say, Iran or Turkey, pistachio nuts, right? They grow up. You can't put pistachio nuts in a basket. You can buy and sell pistachio nuts with gold. So they're going to come up with other things. I think right now it's 40% gold or maybe more, but and there's probably going to be sovereign bonds. But the mechanism is why it works. The world globalism is going away And because globalism is going away, and this will bring it home to everyone. Because globalism is going away, there's no more I'll do it on credit for 30 years. There's no more 30-year bond. We're not going to use bonds to, like, for example, China and the US. China says, we're going to sell you some goods, and the US says, we'll buy them, and here, take a bond, and we'll pay you back in 30 years, right? Invest in our bonds. That's what they're doing. Well, that's not working anymore. Nobody's extending credit anymore. The East doesn't trust the West after what we did to Russia, warranted or not. The West doesn't trust the East because of what Russia did, warranted or not. And so nobody wants to extend credit anymore. I'm not going to lend you money for 30 years. I'm not buying your bonds. In fact, I'm China, I'm Singapore. I'm going to take my own profits and invest them locally. But more practically, I'll extend you credit only for 30 days. And that's the end of globalism. Globalism is about credit. And without credit, you have to go with a current account, which is, as you said, the regionalism concept. So credit going away means that we have to settle up our accounts every month. And that's where the MBRICS platform comes in. We're going to trade. Let's say you're Singapore, and let's say I'm Malaysia. Uh, I have my currency. You have your current Singapore dollar, Malaysian ringgit. I'm not sure what it is, but I think it's called the ringgit. I'm going to buy something from Singapore. Let's say Singapore sells sneakers, right? I'll buy sneakers from Singapore, right? And I'll give you my currency. And then you're going to buy from Malaysia. You're going to buy, I don't know, tires. I'll sell you tires. And at the end of the month, what's the difference? The difference turns out to be that net, you owe me, $50. Well, we're going to settle in gold, right? We're going to settle in that basket. That basket squares up everyone every month. Now, that has other problems as well, but it's the way to manifest trust. There's no credit. Every month we square up or we stop trading with each other. It's actually a pretty good system. Now to get to your point, you can't have the whole basket be gold. Okay. Now, you touched on it. Is there enough gold in the world? Well, there is, I mean, not to be sarcastic, but there is enough gold in the world. Just the price of things has to go up, right? That's right. Okay. But to take that axiom out, there is enough gold in the world, but you have to find it. You have to source it. You have to pull more gold from the West. And if you don't get it quickly enough, you have a deflationary currency crisis in the East. Money stops moving. If you go, we're all going to a gold standard and there's not enough gold, well, things freeze up. You collapse. It's kind of like what happened uh, in uh, in Korea and Singapore in '98. The whole Asian currency crisis was very related to that. So what do you do? Well, okay, ideally we'd like to be. Let's pretend that we'd all like to be 100% gold, right? Well, we can't do that. And you know what? Because not everybody has gold, right? Russia's got platinum. Russia's got palladium. Well, then you weigh the merits. Well, is platinum permanent? Yeah, there's probably some room for platinum. Is palladium permanent? Yeah, there's probably some room for palladium, but palladium's not really global. Russia has too big of a control, but maybe I'm gonna object if I'm Iran. I'm not sure that they will, but then you start looking at other metals and you say, well, platinum. I'll just make this up. Platinum's a yes. We'll put 2% of platinum in there, right? Palladium, we'll put 5% platinum in there. We'll put 2% of palladium in there. Now, these metals have other risks too because they're more industrial than they are in investment. I know palladium's rare, but because it has intense practical applications, it's not well suited as money. I would love it to be that, but because on any given day, if everybody buys cars, the future of cars are going to have more platinum again. Then that's going to pull away from you. You can't be using your money in business. I mean, to create a product. You can't do that. Money needs to be just money, and gold is useless. Useless. You can't do anything with it. It's too expensive. So it's perfect as money. It is a pet rock, which brings us to the next metal that is possible, and that's silver. Now, silver has growing industrial application, right? Solar panels, EVs, but there's a lot more of it around. And it's not in one country or two countries, it's everywhere. And so I believe, although I can't prove that yet, I believe at some point they're going to say we have to start including silver in with the gold and other things, maybe some Chinese bonds, CGBs, maybe some, you're going to start seeing that. And maybe we'll have a little basket of other currencies. But I believe that when you're looking to create a basket that backs or guarantees is probably another word to describe it, the uh, the currencies that are going to be surrounding the table for this BRICS uh, trade, you need permanent, neutral, agnostic, unbiased collateral. And that's gold, number one. Number two, I believe number two is silver. And I believe platinum will go in there. I don't know the palladium can go in it because I don't know that you can. Palladium's really crumbly, you know. It's not in its natural form. It's not easily stored, and it's very light. So palladium takes up a lot of space. It's like cotton candy. So I think you're going to see more metals come in there, and as time goes on, as trust grows, they're going to branch out and use other commodities. Let's use oil. The problem with these things is they need to agree on a price, and who's setting the price right now? The U.S. is. So there you have it. But they're going to have to use something besides gold. Yes, they're going to use other things. I
Yeah,
believe that.
that's a lot to think about there. You also brought up the topic of sovereign bonds, and I think our other guest Jake, he has a question or two he may want to ask you about sovereign bonds.
Hey, thanks, Professor Vinny. Yeah, so on the bonds, recently, I guess it's come to light that the Bank of England and the Cayman Islands seem to be large shareholders of U.S. Treasuries, but in the past, Japan and China seem to be big holders. What's your thoughts on how this is working out with the Cayman Islands? Anyway, so
Yeah.
what's your thoughts on
Well,
that? That's
okay. Well, first of all, the Cayman. I mean, I see what you're getting at, and you're right. The Cayman Islands is just too important financially. Apparently, that's like the second biggest financial. It's just when you look at the map on finances, the Cayman Islands are basically a bridge from Europe and to not Asia, but from Europe to the U.S. So the Cayman Islands itself, as a jurisdiction, exists solely for offshore and onshore transactions. Now, the Europe aspect of it, or the UK aspect of it specifically, is it's interesting that you say it because there's a lot going on underneath the surface, and Japan had, as you said, Japan had to sell bonds, U.S. bonds, so it could take those bonds and buy yen with it to defend the yen. And so it was liquidating basically assets to protect its own currency. And someone had to buy those bonds. And Europe was a buyer of those bonds. The UK was a buyer of those bonds. And the US was a buyer of those bonds. But over the last 6 months, about 6 months, the UK's been an increasingly aggressive buyer of US bonds, and they're putting them in the Caymans. Now, what are they doing? Europe has a problem, and the problem is they're still very tied to the US. And so if we have our interest rates of 5%, it makes it harder for them to their economy to function. They need us to lower rates. Now, Powell doesn't want to lower rates. He's like, I want to get inflation down. Now, how honest is he being with us? I don't know, but certainly he's more protective of it than everyone else is. Meanwhile, in Europe, they are desperate for us to get rates lower. And one of the ways to get rates lower is to buy our bonds. So if they keep buying the 30-year bond, the interest rate on a 30-year bond is going to drop, 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 drop. And before you know it, the yield curve, right? If you have a 5% money market, which is what the Fed's creating, and you have a 30-year bond at 3%, exaggerating, the Fed has to lower rates. Because if you keep having a yield curve like that, nobody will do anything in the US. And they'll just take their money and put it into cash. So they're trying to influence the US to lower rates. Now, this is not just a story that I'm telling you. Every economist that I look at in Europe, I mean, UBS, SocGen, Jeffries. Jeffries is not European; they're global. They actually have a lot of Singapore exposure. UBS, SocGen, I forget a couple other banks that I look at, but one of them is a Rabobank. They're all saying we need Powell to lower rates because he's hurting us. Now, they're not saying he's hurting us. They're saying there is no inflation. They have their own reasons for it. But the reality of it is they're all being squeezed by our higher rates, and buying the bonds is one way to kind of nudge us in that direction. Does that answer your question?
Yeah, it sure does. I appreciate it.
Okay, I guess since we're on the topic of banks here, I think Jake also had a question about the BIS.
Yeah, so over the years we've seen uh years ago people were saying BRICS would never it'd be never make anything, they wouldn't have the banking system, nothing was ever in place. And then now the BIS has stepped in and I don't know how many people are aware that the BIS is helping them. At the same time, they're still working the West with their treasuries or something. So maybe explain to the people that the BIS seems to have its foot in both sides of the door and playing nice and the whole pick up our toys and leave program with the
Yeah, I mean,
yeah. Please,
you
thank
said
you.
it. You said it well. You said it well. The BIS has their hands in both punch bowls, or their foot in both camps, or they're straddling the fence. However you want to look at it, but that's all correct, and I think that's probably good for people to hear. All right, so the BRICS starts out. They start out saying I'm dramatizing it, but the BRICS say we're going to do it alone. We don't need anyone. And this is during COVID. They all decide that. Now, it starts with the supply chains breaking down. I want you to look at the world as management and labor. The West had been management. All right. Why? Because the West controlled the finances and the West had the demand. We're buying it. You're going to give us the price we want. The East was less expensive labor and natural resources. During COVID, the East said, our stuff's too cheap. They really need us. And they said, you're going to pay us more for our supply chains. We get it to you. We pull it out of the ground. We put it in boats. We ship it to you. You're going to pay us more because you're not giving us enough money because our economies are not doing well and you're getting all the prosperity. Fine. So the BRICS say we don't need the West anymore. Dramatizing. We're going to do it on our own. Fine. One of the and they can and they are because now they've got China as a manufacturing engine. They can make their own stuff, right? They've got Singapore as a financial arena, but they don't have the financial thing built out. So they start this M trade. M Yeah. I call it M trade all the time, right? M bridge, M trade because that's what it's becoming. They start a platform and they say, all right, here's what we're going to do. We're all going to do this basket of money and this and that. It's like, okay, we're all really ready. Okay, how are we going to make it work? Well, when you create a financial network like a telephone, you need someone to get it started. You need the pump to be primed. You need someone to seed it. And so they realized that, well, we do need the Bank of International Settlements. Now, in the West, people think the BIS is a Western entity, and it's not a Western entity. It's a money entity. During World War II, they had German gold. They were the Bank of Switzerland. They weren't Switzerland, but they were the Bank of the world. So what I mean by that is quite literally, every country in the West has a central bank, and that central bank manages their monetary affairs. Well, the BIS is their bank. Now, I'm not saying they get money from them. I'm saying the BIS acts as the center of the G7's banks. You have a problem, I'll pull money from him and give it to you. So they're like a customer service rep. So they're the central bank of central banks. Very, very big in gold. And they have expertise, and they have a network, and they have a Rolodex. The old school Rolodex. Oh, you need this? I can get it. They know people. They're connected, right? They're connected. And so the BRICS say, listen, we've got this. We don't have enough gold. BIS says, we can get you gold. we really do need the Western banks because we don't have the financial infrastructure that they do. You need some dollars, JP Morgan can get it to you. You need to get some gold, JP Morgan can get it from Mexico and they can put it on a ship. JP Morgan, this is what merchant banking comes from. And so the BRICS say, all right, let's bring BIS in. And BIS says, great. Now, BIS is in the center of this. They're coordinating it. Now, there's probably going to be a power struggle down the way where the BIS makes themselves more important than they have to be. And China says, we're going to be in control of it. It's not going to be a problem. But there will be a power struggle. But right now, they know that you can't, the BRICS know that you can't get this going without some involvement in the West. So they're not inviting the dollar to be at the table. They're not inviting the euro to be at the table, but they are inviting the business to be at the table. And so to do that, you need the BIS pulling the business in. So they'll do private deals, private swaps. BIS is not loyal to the West. BIS is loyal to money. Now, are they loyal to the West? Well, yeah, they have been loyal to the West forever because the West was where the money was. The money's going east, right? Everything's going east, right? So it's China. The manufacturing went east, and then the demand went east because China buys more oil than anyone else now, pretty much, right? And then the natural resources are needed from the east. Now, if you look at mining, for example, gold, they want gold in China. Okay, so the gold salesman moves up there. In 2010, JP Morgan opens a vault in Singapore. In 2013, ANZ Bank does. In 2014, Deutsche Bank does. And now you've got all these vaults there. Why are there vaults there? Because they want the gold over there. So the gold goes in that vault. And then before you know it, an exchange listed. Now all the business is in the East. The customer's always right, right? And so the BIS is a bank robber, okay? And the BIS goes, well, there's really no money over here anymore. We need to be involved over there. They're bank robbers, right? I mean, they're not bank robbers, but they need to be where the money is, right? And in fact, every time BIS wakes up, they see money going through them to the BRICS, and they're going, well, there's nothing staying here anymore. What are we going to play with? So basically, they need to be involved. So the BIS has been loyal to the West because of money. Now, people who think the BIS is woke or they hate gold, yeah, I mean, you know what? They're going to keep a lid on gold all the time, but it's not because they hate gold. It's because they're always trying to keep it in place so they can buy more for their customers. And right now, the BIS is helping China, it's helping Singapore, it's helping India, it's helping not I don't know if it's helping not helping Iran, right? It's helping all the countries out there. Turkey buy gold. When Turkey says I need to buy gold, you can pick up a phone and call the BIS. And they're going to pick up a phone and call JP Morgan and say, listen, I got a guy who wants to buy gold. Do you know where to find it? It's like, yeah, I know where to find it. All the miners are my customers. So the BIS is the straw that stirs the drink, to borrow a Reggie Jackson analogy. So yeah, the BIS is going to be more important than ever, and eventually they'll come to head to have an argument with China, but not for a long time.
Yeah,
Hope that
that's a
helps.
good explanation. Jake, you okay with that one?
Yeah, of course. It was great. I do have one quick little question on BRICS. We've had comments and arguments with family and people in the chat. People fail to realize that if Russia, for example, is selling oil, but Europe and a lot of countries are claiming that they're doing, sanctions. But when you tell people that Russia is sending oil to India, they're jacking up the price, changing the stickers, selling it to Europe, and everybody in Europe's claiming that they're not buying Russian gold, and nobody in the world's supporting Russia and all that. It's a joke. It's bullshit. Pardon my French. Love that one. But yeah, so isn't it true that that's what's going on, and that's how Europe and a lot of them are still getting their gas and oil and some of their commodities?
Yeah, yeah, yeah. Let me help you people out who aren't plugging into what Jake's saying here. Early on, Patrick mentioned globalism towards regionalism. The world's been regional forever. Okay. But for a generation, we had pure globalism. And so globalists, we're all globalists because we live in the globe, right? Uh, think, oh, okay, the rules are the rules. And if you say you can't do this, then you won't do that. So if Russia can't sell, if Europe can't buy oil from Russia, well, then Europe's not going to buy oil from Russia. No, 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 no. This is how the real world works. This is how the real world works. Europe says, this is why I say geoeconomics, okay? Europe says we have principles and we're sanctioning Russia and we don't want to deal with Russia. But for 40 years, the supply chain has been natural gas from Russia, oil from Russia. They're right there. They're geographically right there. So there's your geoeconomics. Now, all of a sudden, the US and Europe say, no, we're not doing business with them anymore. They invaded Ukraine. And that's a good point. And you stand on your principles. And you stand on your principles. And then it goes to minus 10 degrees in Europe. And people are freezing. And you're worried about getting your government thrown out, and you say, all right, we'll make an exception. But you don't want to lose face. So who do you call? You call someone else. You call India. India is a broker. India is like, yeah, we're part of the G7, G8, G20. Yeah, we might be part of the BRICS. Well, we're not Islam. We're Hindu. So, you guys like us, right? Yeah, we like you. Okay, so India gets along with everyone. India is like kind of like everybody likes India. And so India's like, yeah, we get you some oil. So literally, Russia sells oil to India. India takes the oil and sells it to Europe. Now, you made a comment about tankers. That's 100% true. You see, tankers, one of the ways that we enforce our sanctions is we tell companies, we prohibit them. We won't. Insurance companies are key for oil. Okay, oil in a tanker has to be insured. So Europe says we're not allowed to, because of these rules, we're not allowed to insure tankers. And Europe is big in the insurance area for oil. And so India goes, no problem. We'll just go to smaller tankers. And so what was on one big tanker that was uninsurable because of the specifications, we can't insure tankers that are over, I don't know, 500 feet long. But you can insure tankers that are 250. So they put them in two tankers, 250. Europe gets its oil. People don't freeze. India makes a little bit of money being a bookie. And Russia's economy does well. Russia's economy is doing better now than when the war started. So, yes, the reality of it is this. For 40 years, give or take, we have been living comfortably under the assumption that the rule of law that we have in the United States applies everywhere in the world. And it did so long as we enforced it. But when shit hits the fan and your people are freezing, well, you're going to compromise at least temporarily. The expression, I believe, is there are no atheists in foxholes. Well, there are no sanctions in minus 10-degree winter. And that's it. Geoeconomics is putting aside your ideological differences to make sure you live another day. Yeah, you're right. That's what's going on.
Everything seems to be leading to China asserting its economic power, and the West losing grips on things. And we're kind of seeing this in the micro with the silver price and the arbitrage going on.
Yeah. Well, silver is a little bit harder to explain, but I will touch on it because there's some potential controversy there. The gold arbitrage, well, the gold arbitrage before this is something I did. Okay, in the good old days, I would arbitrage gold during Singapore hours. I would buy gold denominated in yen. I would sell gold denominated in US dollars, and then I would do a dollar yen swap. So I was arbitraging. I was taking the car apart and putting it back together. And the reason that I was able to do that was because, and this is what I don't think people understand this, but the reason I was able to do that, even though I was, I wasn't $1 trillion fund, the reason I was able to do that and make money on a day-to-day basis or week-to-week basis is because the threat of taking delivery was enough. The financial markets took care of the what's what I'm looking for. They removed the friction. So I didn't actually have to make delivery. The financial market said, oh, well, if he doesn't do it, we will. And so the markets converged, and I made money because I was faster or quicker or smarter or knew I lost money for different reasons, right? But when supply chains break and the East says, nope, can't have our collateral anymore, can't have our assets anymore. You want our lithium? You want our lithium? Well, we want your batteries. So put your plant here and we'll give you the lithium. You're not shipping the lithium out. We want you to add to our country. So same thing with gold, same thing with silver. Uh, so historically, you were able to do a financial arbitrage and not have to deliver the metal. And then the BRICS has their problem with the U.S. and with the West, and they say you can't have our collateral anymore. And so the arbitrage, the financial arbitrage that guys like me did, goes away. Poof. There's no more threat of delivery. You can't deliver it. You can't deliver. It's like in Cuba, you can't get your cigars in the U.S. And you can't get Chinese gold out. And China, we won't send our gold there initially. And you can't have guys like me jumping in the middle and arbitraging it. And so the gold price starts to change. Gold goes from being a global commodity, and silver as well, to being a regional commodity. It's more expensive in China than it is in the U.S. Well, why is that? Well, it's because they want it in China, and guys like me can't go in there and close it. And then it gets bigger and bigger and bigger. It gets to $100 until JP Morgan and a couple other banks literally said, this is too much. And they went to China and they said, guys, we can make that go away if you let us go out and buy some gold and bring it to you. And they cut a deal. And in October of last year, more than one bank started taking metal out of the COMEX and bringing it to China. And so the price went from $100 differential to $20. Now, when it opens up again, it'll smack down again. So as long as the U.S. says you can take gold out of COMEX or you can find it in a mine and you can put it on a boat and ship it over there, you're going to see the if there's enough money in it, people are going to start shipping the gold to the West, to the East, which is exactly what we're talking about. Wealth from the West to the East. Until China gets their demand satiated or the BRICS economies in general collapse, I'm not saying they're going to, the price of gold is going to be higher there. And every time it gets high enough, you're going to see gold come over. Now, bringing it to silver, there are several reasons the silver price is that much bigger in difference. One reason is, well, you can't, I don't care how many dollars the spread is from 30, let's say it's 35 to 30, right? Let's use those numbers, right? That's $5. And a percentage basis, that's a lot bigger than gold, right? But the financial world is about percentages. The real world is about putting gold on ships. How much gold can you put on that ship? Well, on a million, on 100,000 ounces of gold, you're going to make more money than on 100,000 ounces of silver. These are real things. You can't just, you know, you can only make, look, if you have a ship that can only hold 1,000 ounces, space, literally space for 1,000 ounces, are you going to put gold or silver in that? I'm going to put gold in it because for the same amount of ounces, I'm going to have a bigger differential. So as a result, the silver differential gets even bigger because JP Morgan's going, oh, look at that silver differential. Yeah, but we can still make more money in gold. We'll do more gold. We'll do more. And when the gold goes away, they'll start to attack the silver. So the silver will persist because of that unless China says we're going to open up our financial markets a little bit. And they're in the process of doing that, but not tomorrow. The other thing is there is some debate about the value-added tax in China on silver. So I don't know. I don't know what the answer is. Okay, but the you know the West doesn't have a lot of value-added tax. We probably don't understand it too much, but I am a little bit familiar with it. So value-added tax, if it's not mandated at the level of the futures exchange, then it's not there. And if it's not there, then it can be factored in based on who's trading. So a domestic person is subject to value-added tax. A foreign person isn't. So, you know, the value added tax has to be handicapped somehow. So it's possible that part of the price is from the marketplace arbitrarily deciding that there's some value added tax in there. I don't think there is much of that. I think the market is genuinely different because you just can't really ship that much silver to make enough money, and it will persist. Now, the other reason is China has shifted from gold to silver. They just have, right? You've got the biggest company in China is I'm not sure if I'm pronouncing it right, Guangchen, and this is from my conversation with Bai. They have, look, if you're the biggest company in China buying silver is also a Chinese owned company, so it's the state. So why are they buying gold? Remember, Yellen recently said uh, excess capacity making solar panels. Yeah. Do you really think China is making that many solar panels? They could be, but that company also has an asset division. They have investments. They sell panda coins, silver panda coins. So they're not just buying for solar panels, they're buying for solar panels, they're buying for investors, they're probably buying for military applications too. It's China. So they're going to keep buying silver because it's cheaper. And all they're doing is they're making the price of silver in the world eventually go higher. Now, the value added tax has to sort itself out. But I believe that that price will remain that way because they're buying it. India bought a lot of silver. China's buying a lot of silver. It's going to be in the BRICS basket. I can't believe it won't be. Does that help a little bit?
Yeah, no, it helps. It helps a lot because I think a lot of people they only look at the monetary side of it, where China's selling silver at a higher price than the West, and but there's so much more beneath that. So you helped out
Yeah,
a lot with that.
yeah. I mean, it's like look. There's a there's a there's two stores that sell the same thing. You know, and one's got a higher price than the other. Well, the one that's got a higher price should go out of business. Well, why is he staying in business? Well, because he's got all the customers on the phone that want to buy it from another part of the world. And so that's it. That's the network. That's what the BIS is about too. You need the BIS to find the buyers and find the sellers. If China's got this insatiable appetite, and the BRICS do in general, if China has an insatiable appetite for whatever reason, you need to find it. 5 years ago, China was producing the silver it bought. 5 years ago, China was buying the silver it bought from exchanges in the West. It's not doing that anymore. It's buying it directly from the miners in Mexico. It's buying silver concentrate. It's buying less pure, less good silver, and it's refining its own now. It's getting harder to find silver. Now, that could be rectified, but that's the way it is right now. Otherwise, you have to tell your people to stop buying it. And they don't want to tell people to stop buying it. They want the price higher. That's my opinion.
Right. And I guess I'll just close with even when you look at organizations like the LBMA, people don't realize that in China they have the most LBMA refineries anywhere in the world. Last I checked, I think it was 18 or so. I think the US only has, I think, 3 or somewhere around there. So things are going to be going into China as they are now, and China's going to be refining them, and then if we're lucky we'll get some of it to come back out.
Oh, yeah, yeah, exactly. Well, when the price goes high enough, all of a sudden, you know what's probably going to happen in 5 years or so, thinking about China? China's really good at seeing what other people do and improving on the process. Um, being more efficient about it. China's going to get, I believe, China's going to get as much money as they can into gold and silver domestically. And then they're going to come out in the BRICS and everyone's going to say, we don't want dollars. They say, well, we've got yuan, we've got renminbi, but you can swap it for gold. You can swap it for silver. Okay, we trust it. And then 5 years from now, they're going to say, take your gold and put it into Chinese stocks. And that's what the US did. After World War II, the US had all the gold, and then it told everyone, take your gold out and put it in stocks. And so that's where your sovereign bonds are going to come into. China has a great strategy. They're struggling with some tactics, but they're fast learners. I think once the rest of the BRICS recognize um, how fair they're being, at least right now, they're going to come around. Like the M Trade platform, for example, you still need someone to watch over the gold. You still need someone to trust. Maybe that's what the BIS is doing. The BIS is like, all right, we're a neutral party. All we care about is the money. We don't care about your nation. Maybe they're going to be in charge. Who knows? But the trust is going to be there because I need your wheat and you need my oil, and that's geoeconomics.
I guess with that we'll wrap it up. That's a great point on the geoeconomics. Vince Lanci, before we head out, can you tell us how the people can follow you on social media and about VBL Goldfix?
Sure, sure. VBL Gold Fix. So it's Victor Boy Larry Gold Fix, named after the London manipulative word Gold Fix. That is I guess it's a newsletter format. I do daily podcasts. You're not going to hear this type of stuff anywhere else. It's not, your daily, regular run of the mill stuff. I have institutional research that I share with investors. I have clients that are institutional traders. I have people like Jake that are just people who want to preserve their wealth and look for insights. And I actually have short-term traders that use the trading levels that we have. Now that's there's a free and there's a pay version of that. So sign up for free, and then we'll wear you out and try and get you to subscribe. But if you do subscribe, that will be you'll get something good out of it. On social media, if you look me up, I'm VBL's Ghost. If you type in VBL space Ghost, you'll find me on Twitter. That's where I am. My words are my letters with the at thing. They're different, but VBL Ghost is the way you're going to find me. But that's it.
Okay, I appreciate that. Yeah, I completely agree. I do get those daily newsletters and thoughts, and it is very very different from just about the rest of the bunch that I do get. I can see the work put into it. But Vince, Jake, I want to thank you both for joining me, and let's do this again soon.
Thank you, Jake.
Thanks,
Great
Patrick.
questions, and thanks, Patrick.
That was Vince Lanci sharing his views on precious metals and the economy. To see more of Vince's views and subscribe to his newsletter, please go to vblgoldfix.substack.com. If you like this video, please do subscribe, give it a thumbs up, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.